everybody, Mike Norman here. How's everybody doing? Finally have some time to make a new video. I've been very busy over the last 2 days. Monday, of course, is the day I send out MMT traders, so I'm always working on that. Yesterday, a lot of things going on. So, a lot of things to catch up on and to talk about. First of all, let me just say that our macro outlook from MMT Trader has really been developing very, very well. Yesterday, I noticed a lot of comment and discussion about the bond market. You had some notable names coming out and declaring that this is the beginning of a bond bear market. I'm talking about guys like Bill Gross. I'm talking about guys like Jeffrey Gundlach. I just found it very interesting and very curious that these guys who are, so-called bond market kings, experts in the bond market, are just now coming out and saying that the bond market is in a bear market. Well, I have a news flash. The bond market entered into a bear market in December 2015. I have been playing the short side of the bond market since then, and the reason why that is the case is because in December 2015, the Fed reversed course on monetary policy and began a campaign of rate hikes. When the central bank, which is the monopolist rate setter, starts raising rates, you sell bonds, you sell rallies. The bond market is in a bear market, and vice versa. When the central bank, which is the monopolist rate setter, is cutting rates, you buy bonds and you buy dips in the bond market. That's how it works. So it's kind of funny for me to listen to these guys who are, proclaimed to be these great bond market experts, really sort of expressing an ignorance on their part about, what moves bond prices. It's not about, the Chinese buying or selling. By the way, there was an article out today saying that the Chinese is rethinking or reassessing its treasury position, and everybody got all freaked out and they're selling. It has nothing to do with the Chinese. The Chinese don't have to buy a single treasury. The Fed is the rate setter. It is the monopolist, and by virtue of that fact, it has complete control over interest rates. It doesn't matter if investors, if they're sinking a safe haven, or if the Chinese are buying or the Japanese are buying. It has nothing to do with that. So these guys have just discovered. But myself and my readers of MMT Trader, we have known months, really years before, that the bond market is in a bear market, and it will continue to go down, and rates will continue to go up until the Fed stops. Very simple. When it stops and says it is done, or when it stops and says it is reversing course, then you do the opposite. You buy them. Until that happens, bond prices are going down and yields are going up. And it may be a slow process. It may be a choppy, erratic process, but that is only because the Fed is moving very, very slowly. It reflects the Fed's intentions. I've explained to you many times, what is a bond yield? It is the reflection of Fed policy over the term. In other words, what is a 2-year yield? That's simply the reflection of Fed policy over a 2-year period. What is a 10-year yield? That's a reflection of Fed policy over a 10-year period. It's like that. So that's what it's all about, folks. It is no surprise to me. It has nothing to do with the Chinese. It has nothing to do with what investors seeking safe haven or yield or anything like that. It has nothing to do with that. It has to do with the monopolist, which is the central bank setting rates. And by the way, that is the same thing as setting prices. And I've said this to you many, many times. The way to think about rate adjustments, they are price adjustments. So when the Fed puts rates up, that is essentially a price increase. Because what is that? A price increase in the cost of credit, and the cost of credit is reflected in the cost of practically all goods and services. Okay, so that's also another thing that I want to mention, and I have been mentioning that it's fascinating to me when I mean it goes on. When I hear people say, "Oh, the rate hikes, they're going to slow down the economy, they're going to squash inflation, they're bearish for gold, they're bullish for the dollar." No, it's the opposite. The rate hikes are inflationary due to the very fact that they are price increases, all right? And because they are fiscal expansions. The government is a net payer of interest, so when the Fed raises rates, that's a net payment into the economy. It raises incomes, all else being equal, okay? And it's not an equal distribution of income. Obviously, it's more skewed towards wealthy and savers who have treasuries. But that's it. That's how it worked. By the way, banks ultimately they raise their deposit rates, so people get a little bit more. So it's a net injection. So that's it. It's not bullish for the dollar. I mean, it's incredible because you go back and if you look, and I've said this to you so many times. Where was the dollar index in 2015? What was it like at 98 or something? Now it's at 94 or 93. Where was dollar yen? It was at 121. Now it's at 111. The euro was at 108. Now it's at 120. I mean, the list goes on. And yet people keep saying it's bullish for the dollar. Same thing with gold. Where was gold? It was at $1,050 an ounce. It's at $1,320 today. You have 5 rate increases. The list goes on. Where was the 10-year Treasury price, the futures price? What, 127, 128? Where's it now? 122. It's very easy stuff. You really don't need to know a lot. You just need to know MMT. So we have a major, major advantage over everybody. Next, crude oil up above 63. This was my call again. We've been long basically for so long. So long. And every single week, today being Wednesday, when the EIA Weekly Petroleum Status Report comes out, I will give the breakdown and analysis to all my MMT Trader subscribers. And I've been telling them every single week, the zombies, the know-nothings, they look at one piece of data. Maybe if they think they're smart, they look at 2. They'll look at crude inventory change. They maybe look at gasoline inventory change. They'll sell because they see gasoline inventory. They don't understand that report has an enormous amount of information in it, and you need to be able to synthesize and understand all that information to come up with a concise outlook, and that's exactly what I've been doing. We've been staying long the whole entire time, and it's still bullish, Next, the yen. I've been talking about this to MMT Trader subscribers. There is a very large short position in the yen held by speculators. And I've been saying for a long time, weeks and weeks and weeks, this is wrong. This is wrong. It's against the fundamentals. The fundamentals being that what is going on in Japan, Bank of Japan with the asset purchases, and I'll get into that in a second, and negative interest rates. That's fundamentally bullish for the yen. The government of Japan operating with sort of a fiscally conservative policy that is a budget balance objective that is bullish for the yen. The country running trade surpluses, that is bullish for the yen. So you have this very fundamentally bullish underlying forces for the yen, and you have this gigantic short position by speculators. So what happened the other day? The Bank of Japan, for the first time in a surprise move, reduced, for the first time in over a year, reduced its bond purchases, and everybody took that as, a tightening. What, the irony is it's exactly the opposite, but now the zombies are all going to start to cover their yen short, so the yen's going up. We've been long the yen. Stuff is not hard, folks. It's just, it requires mental game. It requires patience. Most of you do not have that. You want instant gratification. You want the next trade, boom, going to give it to... No, we don't operate that way. We have patience. We have mental game. So a lot going on. All the things I've been talking about. By the way, we bought one of my stock recommendations was Seagate Technologies back in October. We bought it at 33 and change. It went up over 47 yesterday when news came out that Seagate was an early investor in the cryptocurrency Ripple. I did not even know that. I bought Seagate on a fundamental valuation. By the way, in my video course, MMT value stock trading, I explain how I do all this, right? That's on my website, pitbulleconomics.com, as are all the other things that I offer, my MMT Trader Report. Go to pitbulleconomics.com. You could sign up for a 30-day free trial. Plus, I have the daily Treasury Statement course. That's another thing. Maybe I'll talk about that later as far as the so-called corporate profit repatriation, right? We heard so much about that tied into the tax reform law. Is that happening? Is that happening? Well, I can tell you. Maybe I'll tell you later. So go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. You also have zombie trading on there. We front run the zombies and get out before they die. That's a Forex signal service. I got my courses, my 25-hour Forex video trading course, the daily Treasury Statement, understanding the daily Treasury Statement course, and MMT value stock selection course. See everybody later. Bye-bye.